Is the equity correction that began in early April over? Well, after an almost 8% pullback in the NASDAQ 100 between April 2nd and April 18th, we've seen a significant multi-week rally that has reclaimed over half of the move lower. The recent strength seems to coincide, paradoxically, with a string of worse-than-expected economic data that began with the 1.6% GDP number on April 25th, and then followed with the weaker-than-expected ISM on May 1st, and perhaps most importantly, the disappointing NFP number on May 3rd. The narrative is that if the economy is slowing, then the Federal Reserve can finally deliver on the rate cuts that the market has been forecasting for months. Now, as of last week, the Fed funds market was pricing in the probability of just 37 basis points of eases in all of 2024. That number's changed to 45 basis points now, according to the CME FedWatch tool. Now, there is another potentially bullish wrinkle that happened at the May 1st FOMC meeting. Federal Reserve Chairman Jay Powell announced the reduction of the Fed's quantitative tightening policy from $35 billion per month to $25 billion per month of bond runoff. Now, although the reduction is small, some traders believe it may be the beginning of the end of the QT program that has worked to push longer-end rates higher. Of course, any equity rally probably needs a confirmation that the inflation isn't accelerating to the upside, and the next important inflation release is the CPI data on May 15th. If a trader believes that recent strength suggests further upside, they could express that by buying the June micro E-mini NASDAQ 100 futures contract at 18,100 and targeting a move to new highs of 18,900. A stop for this trade could be placed below at 17,600. Now, this trade could make $1,600 if the target is reached and risks $1,000 if you're stopped at your level. Now, if a trader believes the NASDAQ is going lower, they could sell the June micro E-mini NASDAQ 100 futures contract at 18,100 and target a move back to the January lows of 16,700. Now, a stop for this trade could be placed above at 18,700. This trade could make $2,800 if the target is reached and risks $1,200 if you're stopped out of your level.